Welcome to your Mortgage Insider Update, October the 14th. I hope you had a great Columbus Day holiday. The banks were closed. So first day of trading on the bond market. The stock market has had an interesting few days. The stock market was open on Monday. Friday having a huge sell-off. Dow Jones over 500 points down. But then on Monday came back about 500 points, all over, once again, tariff worries. So President Trump tweeted or Truth Socialed his comments about trade negotiations going sideways with China, then tried to walk that back on Sunday. Monday, we got the bounce back on stock market, but then today, stocks are down, which has really helped interest rates. So unfortunately, money pulling away from stocks, that knee-jerk reaction is bringing some positive into the bond markets. So we'll take a look at the 10-year Treasury specifically, but mortgage bonds overall yields improving. We take a look first at 4.4, just under 4.0398 on the 10-year Treasury this morning. Mortgage bonds prices higher. Take a look at what happened on Friday, though. We can see a huge sell-off that happened in stocks really benefited the bond market, with the 10-year Treasury dropping from a pretty heavy level above that 25-day average at about 4.13, now sitting about 10 basis points lower. Finished today, Friday, about 4.05. Started today, after skipping Monday, and the bond market trending down. It's actually gone as low as 4%, 4.01% this morning, which tests the levels that we were in the middle of September. So this was that dip we had right before the Federal Reserve cut the interest rate, and then after they cut the interest rate, the market reacted and went a little bit higher as far as the rates have just kind of leveled off in this higher range in anticipation of the next Fed meeting here in a couple weeks at the end of October. The Federal Reserve will come back. Unfortunately, the government shutdown is limiting some of the information as far as jobs reports. We did not get the 1st of October. We would have gotten that first Friday, the September jobs numbers. So that's why I think things are relatively level. We are going to get inflation numbers. The CPI is actually something very important to anyone on Social Security. Social Security will base their cost of living increases for 2026 based on the CPI numbers. So the government, even though the government shutdown is in effect, there are still people working diligently to make sure that that specific report gets out into the marketplace here later this week. That could drive interest rates, back up potentially. With the rate of inflation has been sticky at just under 3%, not anywhere near the 2% Fed target. So definitely positive news as we await the CPI numbers and the Federal Reserve meeting that will take place at the end of October, and that will set the tone. So far, the betting markets have basically priced in a 0.25% cut here in October, and then a pretty substantial likelihood of a cut again in December. So 2 more cuts projected in 2025. We'll see how the data comes out, and we'll see how this federal shutdown plays out as well, because the longer this drags on, the worse it's going to be for the overall economy. It could be a positive thing for interest rates, but if the federal government defaults on its debt, those 10-year treasuries, the rate's going to start to climb. So we've got a push-pull situation. We'll keep an eye on it for you and bring another update next week. Have a great one.